Captain America and whole life insurance are actually way more similar than you might think. I mean, everybody knows who the Avengers are, and if you don't by now, watch the movies. You'll thank me later. In today's video, what we're going to do is we're gonna break down Infinity War. I mean, the infinite banking concept, using some fun Marvel references so that you can truly grasp the importance of what it is and what it can do for you, not just in your life, but for the world. Yeah, I said the world. But before we blast into this video, make sure that you click that button right there, the subscribe one. Subscribe to this channel and also smash that notification bell so that you don't miss any videos. I first want to talk to you about the raccoon in the room, that furry little thing. Yeah, whole life insurance. I say it and you say, boring.
Are you yawning?
But you're wrong. It's actually one of the most fascinating things that you could ever learn. It's like a superpower. And like I said earlier, it could change the world. Now stay to the end for that. Steve Rogers used the super serum to turn into Captain America, but he first had to undergo multiple tests to ensure that he was the proper fit to become Captain America. When you boil it all down, Steve didn't seem like the perfect candidate from the surface level, but it was what Steve had in his mind that made him extraordinary. There was one goal that Steve wanted, and it was to join the Army, and he did just that, despite the odds. So many people told Steve he wasn't enough. He can't do this, he can't do that. I mean, can't you relate to that? How many people tell you that you can't do something? You're not enough, you're not good enough, you shouldn't do this, that's not gonna work for you. And you know who it always is? The people closest to you. I always tell you, if you start listening to people that tell you you can't do something, what you're doing is you are agreeing to their failed dreams. You're going to live their failed dreams, not your dreams that you were put on this earth to live. Steve lived those dreams. It all begins with your mindset. It isn't about having the strength to begin. It's about the patience, the discipline, and the long-term perspective that's required for someone like you to go from good to great. It's understanding the process and not allowing limited beliefs to get in your way. When it comes to opening your policy, you can treat it like a traditional whole life, and you can lose out on the opportunities, or you can use it to take back control of your money. So going back to Captain America, not only was his charisma, his discipline, and his resilience against the haters a great reminder of staying true to yourself and the path, his transformation into Captain America actually is a great example of the difference between whole life and specially designed whole life. Now bear with me for a second. Let's say scrawny Steve Rogers represents your traditional, typical whole life insurance policy. It does what any whole life does, provide some wealth for your family when you pass away. That's kind of depressing, right? But what if I told you that it didn't have to be that way? Whole life insurance has the potential to do a whole lot more than that. Now, before I explain why, you first have to understand that the whole life you currently have is most likely not the one I'm about to tell you about. But don't worry, stay to the end of this video and I'll make sure that you have everything that you need to get started, and it's way easier than you think. But you gotta change your mindset. While we're at it, make sure you hit that little like button right there. Oh yeah, and the subscribe button. I'm waiting, hit it. Did you do it? Awesome. Well, let's get back into it. You see, the biggest difference between Steve Rogers and Captain America is the super serum that he took to get his powers. It was custom made for him. If someone else was to take it, they wouldn't get the same results. I mean, look at the Hulk, look at Red Skull. But with the proper mindset, character, and a process, it effectively supercharged Steve Rogers into who we know as Captain America. You see, your specially designed whole life does the same exact thing. It's custom. It's custom made to accommodate your financial needs, your savings program, and it's supercharged to be used not only after you die, but while you are alive. You see, with typical whole life, you can't even come close to the power and the effectiveness that a custom designed policy has. Now, let's compare the superpowers of traditional whole life and specially designed whole life. The primary purpose of a traditional whole life insurance policy is to provide a death benefit to the beneficiaries upon the insured's death. In contrast, the IBC approach, which is infinite banking concept, focuses on utilizing the cash value component of the policy as a financial tool for banking and investment purposes while maintaining a death benefit so that you're protected when you die. But when you die isn't what we're focused on. The cash value growth, that's what we care about. So if the cash value growth is what we care about, in a traditional whole life insurance policy, the cash value accumulates over time based on the premiums that you pay into the insurance company's general account. But you're not going to have access to that cash value, not in the first year, typically not in the second year, and more than likely not in the third year. But the specially designed policies that we build to be used for the infinite banking concept, which is a process, are very different. They're literally designed upside down and backwards. You see, we put all the focus on maximizing the cash value, making sure that the cash value grows through a thing we all have heard of, compound interest, but adding uninterrupted compound interest. You see, the number one thing we want to do is we want to put money into the specially designed whole life, but then we want to be able to use that money to go make money a second time. So riddle me this. If I put money into a specially designed whole life, then I want to go over and I want to pay off my debts. How would that work? Simple. If the policy is designed the way that the specially designed whole life that I'm referring to is, then what you're going to do is you're going to put money in the specially designed whole life. We're immediately going to identify a place for that money to go to work a second time. We're going to take a loan from the policy and we're then going to pay off debts. But where did the loan come from? A lot of people think it comes from the cash value, when really the loan is given to you from the general account of the insurance company. The insurance company advances you part of your death benefit up to a max being the cash value that you have in the policy, because the cash value serves as collateral. So imagine that you put your money in the policy, you take all that's available out to pay off debt, but none of the money stops working for you. It continues to earn interest and dividends the entire time, while you then pay off the credit card debt. And the credit card companies are probably charging you what? 15, 20, 29% interest? Once you pay the credit card off for the infinite banking concept, remember it's a circle, your money started on the left, it moved over through a loan from the policy to pay off your debt, you no longer owe the credit cards a monthly payment anymore. But you don't stop paying the monthly payment. You see, what you do is you complete the bottom part of the circle and you have it come back around and you repay your bank, which is the specially designed whole life. It's the same dollars, folks. You were giving the money away to somebody else's bank, the credit card, at a high interest rate. What you now do is you pay the credit card off using your policy and the loan from it, and you then recapture and recycle the money that you used to give to the credit card companies. It's the same thing as earning that high interest rate without any risk, because you were giving the money away. Now you're taking back control of that money. This vehicle is the only way to do this, because your money never left the account. Therefore, your money earned uninterrupted compound interest. The whole while this is happening, your money earning uninterrupted compound interest does that on a tax-free basis, as long as it's designed properly, and that's exactly what we do. Not only that, this account is private. It's the reason why you'll never know how much money the Rothschilds and the Rockefellers have. Yeah, you putting it together? They have their money in the same place I'm telling you to put your money. Therefore, because it's private, nobody knows that you have it. Ding, ding, ding. It's also protected against judgments and liens in most states. And then someday when you graduate and go off to a better place, after using all the cash value year in and year out and earning interest and dividends on all of it, even if no money was still in there, you heard how I said that works, you pass away. That's right. The remaining amount of the death benefit that you didn't use is passed to your beneficiaries tax-free. By using the infinite banking concept, which is the process I described with the circle, you indeed take back control of your money. This is how you become your own bank. In every superhero movie, there's always a villain. And in this movie, that villain is the traditional bank. You see, they take your money and they make it work for them. Because between your lazy cash and the high interest that they charge you on the money that they lend you, they're in control. Did you know that banks make between 400 to 1,300% more than you do on the money that you deposit there? That's a fact. But get a load of this fact. Traditional banks are the single largest purchasers of whole life insurance in the world. Look it up. BOLI, B-O-L-I, stands for bank-owned life insurance. The top 5 banks as of 2021 had $75 billion of bank assets in, yes, whole life insurance. Boring? Yeah, but you see, it works. The wealthy know it, the banks know it. The only person that doesn't is you, because you've been lied to your whole life about how this works. So if the banks are using their whole life policies as a superpower to control your money, then why aren't you doing the same thing and using it for good? So some of the things in the applications you can use this for is your personal finances. Debt management, that's right, you can use this to pay off all your debts. How about real estate investments? We all love real estate, right? Well, sure, you could use it for that. Business finance, to finance your business or finance anything. Legacy planning. Someday you're not gonna be here. What legacy are you gonna live and how is it gonna be funded? How about your children? How about your retirement? How are you funding your retirement? You want it to be tax-free? I mentioned to you earlier that you can use whole life insurance to change the world. And I meant that. You see, with the infinite banking concept, you can help create nonprofits. You can put money toward good causes that will actually make a difference and change somebody's life, whether those people are your family, your church, your business, or your favorite charity. See, the thing you gotta do is you gotta take action. You gotta be a hero. So what's holding you back? What's holding you back from being a superhero? Seriously, comment below. Let me know what your thoughts are. What's holding you back? Oh, and if you haven't already, make sure that you like and subscribe this channel to help get this message out there. We need to help as many people as we can, and I need your help to boost the algorithm so that more people can see this. If you liked this video and you want to learn how you can actually design your own specially designed whole life to supercharge your finances, well, check this video out right here. How to design a policy for maximum cash value in the infinite banking concept. Thanks for joining today.